Hi, guys. Welcome to Coronavirus Real Estate Updates from the home office. So, today I want to talk to you about the luxury market. We're in April now, and maybe I'll take that off. Ooh, much better. Okay. So, the luxury market in both Manhattan and Brooklyn has been suffering, as you could imagine. And the question is like, well, why do we care about the luxury market? What are we worried about people, multimillionaires who are buying or selling or whatever? And the truth is, well, first, a lot of the people who are watching this may very well be in the luxury market because we are in New York City, and New York City has a luxury market to speak of. The other thing is that even if you're not in the luxury market and you are in the middle of the market, which I define as 2 to 5 million or 2 to 4 million, depending on who you ask, and below 2 million in Manhattan is the low end of the market. In Brooklyn, the high end of the market is above 2 million. But why do we care? Because the prices that the high end of the market experiences, when there's downward pressure on those prices, then the middle of the market experiences that. That's what we've been seeing since 2017 easily, that a glut of new development inventory in the high end of the market has been putting downward pressure on the middle of the market. The middle of the market for the last couple of years has also seen a downward trend, particularly in Manhattan. And that downward pressure continues down into the low end of the market, not as much. But it does matter, and it tells us what's going on overall and what we can expect. So the couple things that have been happening, I'll bring you to a couple of articles that I was reading recently. This is with both Manhattan and Brooklyn. I'll start with Brooklyn. Again, in Brooklyn, the high end of the market is defined as maybe over 2 million. Brooklyn's luxury resi market saw only 2 deals signed last week. This article is in The Real Deal, one of the best trade publications here. The priciest deal was for a townhouse at 48 Sydney Place in Brooklyn Heights, which went for $6 million, 5-bedroom, 3,850 square feet. Was on the market for about a year, and it went into contract about 10% below its asking price. The other deal last week was for a townhouse at 289 Union Street in Carroll Gardens, which went for $5.2 million. The 6-bedroom property spans 3,900 square feet and went into contract at its asking price after 82 days on the market. So what this means is that there's not a lot of stuff going on in the luxury market in Brooklyn. Okay, and don't confuse things going under contract with things going into closings, because closings in New York City are on an average of 75 days to close, from contract to close. So anything that's closing now in March, April, even May, these things went on to contract at least 60, 70, sometimes 90 days or more ago. Okay. So now let me just show you also in Manhattan, we have another article from Yahoo Finance. Coronavirus hammers the already battered NYC luxury housing market. For the second week in a row, only 2 contracts were signed in the luxury market, which is above 4 or 5 million in Manhattan. And this is the same as it was in the week prior to this. There was only 2 luxury contracts signed. This is kind of what you would expect. I mean, in a city of how many hundreds of thousands of luxury apartments there are, or apartments in general, there are not a lot of transactions happening right now. They go on to say that leading up to the COVID-19 crisis, New York's high-end market has been disproportionately impacted by the increased mansion tax on homes over $1 million and the SALT, or state and local tax deduction, that's limited to $10,000. There's also the threat of other tax changes like a pied-à-terre tax. Then there's the notion that real estate developers are just out of touch with reality and New York housing needs. So the thing that's important about some of these changes, and this is probably the subject for a whole different video because it's a longer topic, but there have been a lot of changes by the progressive legislature in New York that have been targeting the real estate market in the city. And You know, the thing is this idea that developers are out of touch. I am fully supportive of a lot of progressive policies, but I also know that working with developers, talking to developers, working with landlords, talking to them, that, you know, this is not it's not a war on the middle class or the working class of New York City in terms of the kinds of developments that people are making. If if you could build, okay, anywhere in Manhattan, most any place in close in Queens, like Long Island City or Astoria, you know, or a lot of parts of Brooklyn, if you could build a condo building with a ton of sub $1 million 2 or 3 bedroom apartments, I could show you like a sold out building before the building is even done, right? Especially in Manhattan, especially in close in Brooklyn and close in Queens. Like the problem is that it's too expensive for developers to build inexpensive housing if in Long Island City or in Brooklyn Heights or in Park Slope or any of these places that you kind of would want to see these things. It's just very hard to do. And in Manhattan, below 100th Street, forget about it. So there has to be a little bit of addressing of the supply side of things if we want to see more affordable housing in the city. So we started out talking about luxury real estate. We ended up talking about affordable housing. That's what I got for you. I welcome questions, comments, anything like that. And that's it. Signing off. Going back to the living room. I probably won't need this. I hope you're all doing well, staying safe and healthy.